So in today's video, we're going to talk all about structure and how to trade with the trend, how to trade with the momentum in the market. Now, I'm sure you heard of this saying before, trade with the trend. The trend is your friend. Now, we've been covering this a lot recently with the BD members because it seems to be, as a trader, it's very hard to trade with the trend and actually understand the structure and momentum in the market. Now, you have to remember that currency pairs move from people buying and people selling. The more people sell, price goes down, and the more buyers they are than there are sellers, price drives up. Look at it a bit like a river or tide. Okay, you always want to swim with the flow of a river. You don't want to swim against it, you always want to swim with it. And that's the same with currency pairs. You always want to trade with the trend, trade with the flow of the money, of the momentum in the market. So what we're going to do here is we're going to mark up trends in the market and structure and how to trade them successfully. Now, what I've got loaded up here is pure price action, candlestick patterns at its finest. Now, the first thing I like to say to everyone is when you've got a currency pair loaded up, the first thing you want to look for is the direction of that currency pair. Is it in an uptrend? Is it downtrend? Is it going sideways? Because at the end of the day, that is going to give you the direction of the trades you want to be taking. Okay, you've got a 50-50. You're either going to be taking buys or you're going to be taking sells. So first of all, we want to look at the direction of a currency pair. Now, just using pure price action, if we look in the top left corner to the bottom right corner, it's a downtrend. Okay, that's pretty much it. From the top left to the bottom right, it's a downtrend momentum. Now, a lot of traders will use moving averages. Moving averages are an absolute great way for direction of trends. Okay, if we just add a 100 moving average in here, pretty much we use moving averages like this. If it's below the moving average, it's a downtrend. If price is above the moving average like this, it's an uptrend. If you kind of got price going sideways like this, it means it's a sideways trend. It's ranging or consolidation. Okay, so just from looking at this example here, it's a downtrend. Price is below the moving average. So what we're looking for are sell trades. Now, what we want to start to do is mark up structure in our market, on our currency pairs. We want to start marking up support and resistance. Okay. Now, what we're looking for, let me just bring up my charts so we can see, is we're looking for areas like this. So we've got our support line here, we've got a support line here, we've got a support line there. Okay, now remember, we want to be trading with the momentum. Okay, because like I said, if there's a lot of people selling, it's going to drive the price down, and we want to be one of those sellers that's capturing this movement here. So what we're looking for is something like this. We want to see breaks of structures to look for entry points into the market, and also to give us a direction or live direction of a currency pair. Now, when I say a current live direction of a currency pair, I'm going to cover that in the next few minutes and you'll understand what I mean. Okay, so because this is a downtrend, okay, we're going to be looking for something like this here. We've got a nice support line. We want to see that break of structure. So this break here, okay, price might do something like this. It might do that. We're going to probably retest of this structure here, come down, break previous structure. Again, it might chop around. It's pretty much going to do something like this. So we've got a trend down, we've got a pull back, we've got a trend down, and we've got a pull back. Now, I won't go in too much detail about this, but basically what this means is you've got a lot of sellers in the market, and once, you know, sellers start making money, making some pips, they start taking profit. They start closing their trades off, like you and me would. If we took a trade and it went to about 50 pips, we'd close that trade off in profit. Because we're closing that trade off in profit, we're no longer taking sell trades. So price starts to pull back slightly. And then again, previous structure is being tested. And guess what? We start selling again. Structure gets broken, retested, and everything like that here. Now, a perfect example of that here is something like this here. Okay, I'm just going to mark it up like this here. So just going to make that like this here. And as you can see, we've got previous support line here. So what's actually happened is prices come down, bounced off this support like this here, come back up, come down, retouching that structure. Now, this is the most important part about trading pure price action, pure candlestick analysis. And let's just delete, just to keep it really simple, let's delete that moving average now, okay? And we're just going into the kind of bread and butter of trading, the actual pure candlesticks, okay? When you see break of structure just here, so you see how previous support gets broken, that tells me that the momentum is still going down. Now remember, support and resistance gets broken, gets respected all the time, okay? Now, if support and resistance or structure, supply and demand areas, if they get broken, it means that there is a large momentum pushing price through that structure, that support and resistance. And as you can see here, price continues down, retouches, drops, retouches, drops, okay? And again, if we just keep a focus on this point here, okay, keep a focus on this point. You see how it looks like we've got support area just there. Let's mark it up as well. So I'm just going to mark it up here, okay? Again, just there. Look, keep an eye on this, okay? Price comes down, breaks this here, comes down. Obviously, we'll be taking a sell trade just there to the previous structure, comes back up, comes here. And again, look how we break the structure here. Because it's broken structure, we know that it's continuing into a downtrend. Price pulls back to this previous structure there, and we continue down like this. So this is marking up structure in a market. Now, remember what I said about watching it on a live chart. Now, let me just show you something, because it's very interesting. When we actually look at candlesticks and we look at the actual charts like this here. Now, as you can see here, I've got this simulator loaded up here, and let's just pause it just there. Okay, let's just pause it right there. What's happening right now on the charts? Well, it looks like here, Jamie, we've got an area of support. I know we've got an area of support just by looking at the candlesticks itself. It looks like it's stuck at this support line. Look at the previous wicks, okay, forcing price up. It looks like a support line. Now, what we're looking for, okay, you see how our price kind of bounced off it, is this little candlestick here. Okay, I don't know what's going to happen. Okay, I've just loaded up a simulator. Okay, but previous support has been broken. So this is going with the momentum. This is going with the trend. Remember what I said? It's a downtrend. We know it's a downtrend. Okay. Now watch this. What I'm looking for now is a possible entry point in the market. So as you can see here, just pause it there. Again, we've got a nice little break and retouch of a structure. So this is a really powerful technique of trading. It's kind of a 1, 2, 3 trading, okay? We've got our break, which confirms that yes, structure has been broken. The momentum for a sell is still strong. Price pulls back, retouches this structure here, and then we take a sell trade. Now, what is interesting is if we mark up this structure like this here, and this structure gets broken to an upside like this here. So if structure gets broken to the upside now, this confirms on a live condition that that we're now going into an uptrend, okay? Because remember, okay, if structure, look at it a bit like support and resistance, okay? I'll just bring up my my charts here like this. So mark up like that. I'm going to mark up like this here. I'm going to mark up like this. And again, okay, what you'll find, if there's a lot of sellers, it's going to crash straight through that structure. It's going to pull back. It's going to break through that structure. It's going to pull back. It's going to come here. Now, what will happen, okay, eventually, you know, trends in the market are going to start to slow down, and the momentum is going to switch into an uptrend. You're not just going to get a trend for forever, okay? Market goes up, comes down, goes sideways, up, down, up, down, up, down. Now, if previous structure like this gets broken, okay, then it's normally a sign that we are switching momentum and going into an uptrend. So this is what's interesting, okay? If we just mark up, let me just I'm just going to mark up all the resistance here, okay? We've definitely got a touch there, okay? Watch this. We'll just keep an eye on it, okay? And you'll find, okay, so prices come back up to this structure here. Now, watch this. See how, again, it's broken off it. Now, I'm not actually looking for a sell now. I'm looking for a possible buy. And the reason being is because it looks like we've got some structure just there. See how we've got some structure? Now, your next question, Jamie, is why didn't you take a sell here? We've got structure there. We've got support. You can see here, prices come down to this support, bounced off it, come down, kind of bounced off it slightly, come down. And your question is, why didn't we sell here? The reason why I didn't sell here is by looking at the candlesticks. Look at the candlestick patterns here. There's no engulfing candle. It's just kind of wicks on bottom. If wicks are on bottom, it means price is being forced up. And what happens now is that structure has been broken. Now we're above the structure. I'm looking for a possible buy trade. Now, I'm not just going to take any buy trade. Okay. Let's see what happens. Okay, so that structure is being held. So we are now looking for a buy confirmation. Now, I'm just going to mark up the next area of structure in the market, which is here. Okay, as you can see here, we've got a touch there. We've got a touch there. Now, I want to see if this structure here gets broken. If this structure here gets broken, this resistance area gets broken, then it confirms to me that this structure has been broken to the upside. This structure has been broken to the upside, which means, yes, we're now going into an uptrend. And I bet you any money now, if I just add a moving average in, I bet you we're going sideways currently. We've gone from a downtrend, we're going sideways, and then we're going to go into an uptrend. Remember what I said about moving averages? If we're below it, it's a downtrend. If we're going sideways, it's sideways momentum. And if we're above the moving average, it's an uptrend. So watch this. Let's see what happens here, okay? So we kind of bounce off that resistance area. I'm not particularly that bothered at the minute. Okay, so it looks like that structure, that support line is being held, as you can see there. Do we break? Okay, so we break this one now. Okay, here. Do we come down? Do we come down here? Okay, I'm just going to pause it there. I'm just going to bring it up here. Now watch this here. Okay, I bet you any money now. I bet you any money now we're going to rock it up from this. I bet you any money now. Like I said, I don't know what's going to happen here. Yeah. And we do. Okay, we rock it up here. Now, the reason why I knew that was going to happen, let's move myself out of the way like that there, is simply because we have 3 areas of structure. I'm just going to pop this like this here. Watch this, okay? And this is what I said about a live market condition. So we were in a downtrend, and then notice how structure got broken. So we kind of, this support got held. We broke this previous resistance here. Price broke this resistance here, then it came up, it retouched and bounced off it like this here, okay? And just keep an eye on it now. Because we're in an uptrend, I'm now looking for, remember what I said, because we're in an uptrend now, I'm now looking for pullbacks in the market there here. So I'm looking for something like this. Uptrend, come off, break structure, pull back, enter the market, structure, pull back, enter the market. I'm looking for something like this. So let's just keep an eye on it. Let's just keep an eye on it, okay? So I'm just going to pause it there. New structure has now been formed on this currency pair. I'm just going to slow it down slightly. Here. This structure has just been here. You can see here, we've got a number of touches at this area at the top here. See this? 1 touch, 2 touch. Looks like we got a 3 touch. Let's see what happens. Okay, look, okay, just going to bring it out like this. See this? This is a prime example of what I mean about structure. So we've got a resistance area at the top here, because you can see price came up to it, bounced off it like this, dropped. It's come back up. It's broken resistance now. It's broken it. It's come up. It's retouched. We're going to pretty much rock it again from this level. Hopefully we do. And yeah, okay. You see that there? Again, that is now structure to the upside, and that's pretty much how we would trade pure price action at its best, marking up trends, pullbacks, and structure, support and resistance in the market. Now, the reason why I'm explaining to this is because myself, I am a scalper. Okay, I am in and out the market, kind of within a few minutes. Maybe I'll hold a trade an hour at tops. Now, I will take trades both with the trend and against the trend. Now, I got taught once as an institutional trader, why do you not take trades against the trend? Okay, for example here, we've got a trend down, pull back, trend down. Now, if I can make 2 or 3% gain on my account trading with the trend, what is wrong with trading a pullback and making 1 or 2% gain on my account and then taking the trade back down with the trend and making a further 2 or 3% gain on my account? That's exactly what I do. Now, there's nothing wrong with doing that, but you've got to understand when you take a trade, is it with the trend or is it against the trend? Is it a pullback? Is it a break and retouch? Is it a bounce off of support and resistance? You've got to know that when taking a trade. Now, to give an example, with the binary destroyer, look at NZUSD, 1 hour time frame. Now, let's just go over exactly what I said previously. Let's mark up the structure on this currency pair. Now, first of all, we need to see the direction of this currency pair. Well, we've got the BD to tell me it's a downtrend. I can see that by looking at the bands. So let's start to mark up the structure on the market. We've got a nice little resistance area here, and we've got a nice little resistance area here, and we've got a nice little resistance area here, just like this here. Probably bring this across just there. Okay, so when I look at these areas like here, okay, I'm just going to bring it across to the top here. Okay, just make it a little bit smaller. What we've got here, just mark it up with some, I'll make it white so you can see. We've got a high there. We've got a lower low there. We've got a lower high there. We've got a lower low, lower high, lower low, lower high. Okay, so what's actually happening here is we've got a trend down, we've got a pullback, we've got a trend down, we've got a pullback, we've got a trend down, we've got a pullback. Well, when I get this signal here, what do you think this is? Well, this is an absolute beautiful sell with the trend. Now, because this is a sell with the trend, we pretty much get zero drawdown. This trade literally goes into profit straight away. Okay, we get about 90 pips off this trade. Now look at this trade here. Is this a trade that we would take? No, because it's a trade against the trend. What we do is we wait to price to pull back to the structure, which is here. How do I know that's the structure? By looking left, you can see here we've got a nice support line here. Price comes back up to this area, retouches it, and again, we get an absolute beautiful sell. No drawdown whatsoever. And again, this trade, we would have got about 75 pips off the trade. We have this trade here. Would we take this trade? No, it's against the trend. Price pulls back up to previous structure. Again, by looking left, I know that structure is being broken all the time. It's going down, pulling back, breaking structure, pulling back, going down. Okay, and again, we get another trade that is nice against the trend. Now let's look at this trade here. Okay, so this trade is against the trend. Now I will also take trades against the trend. The only time I would take trades against the trend is if we have higher time frame support and resistance. Okay, so what I do when I look at trades against the trend is I say, okay, is price gonna bounce off this resistance? Okay, so I just let me say that again. Is price gonna break off this support? So I just mark up my charts like this here. I go to the higher time frames. Let's look at the daily. Okay, I drag that across like here. And again, you can see it looks like a nice area of support there. A nice touch there, nice touch there, definitely a nice touch there as well. Okay, so I used this to gauge whether I'm going to take this trade here with the trend or against the trend. Now I know this trade's against the trend, so what I would tend to do is just go for a smaller take profit level, maybe 5, 10 or 20 pips. This is the 1 hour time frame, so I'll probably go with around a 50 pip take profit. We're above the moving average. Let me say again, we're above the TCA line. The TCA line's turned green, MACD's crossed over. Nice little trade against the trend. Okay, what I would then do is I would mark up the previous structure, which we can see here. okay? Because look at previous structure. We've got support, structure got broken. We could pull up back to this level here. If we get the MACD overbought here, we get a Mogwai signal here. Absolute beautiful trade with the trend. I ride the trade back down, okay? So both what I'm doing here is trading and counter trending. So I take a trade that's against the trend. I then take a trade that's with the trend. Now what I'm doing is a very experienced and advanced way of trading, but I always recommend everyone to do this, okay? If you want to be successful at trading, you've got to understand the trades that you're taking. Are they with the trend or against the trend? Because a lot of traders, you know, will go, Jamie, what's my stop loss and take profit when I'm trading the binary destroyer? Well, is it a trade that's with the trend or is it against the trend? If it's with the trend, you can push that, get a lot more pips out of your trade. If it's against the trend, you want to be in and out of your trades, okay? If you lose the trade, you know why, because it's against the trend. But again, there's nothing wrong with taking trades against the trend as long as you understand that logic that you want to be in and out of your trades. You don't want to be holding them because you're going against the flow of the momentum. So yeah, my name is Jamie Palmer. That's structure. That's how to trade it. And yeah, I hope you enjoyed the video. Thank you for watching.